Nothing I share here is financial advice. This is all based on my own experience, my strategy, and how I see the market. You're responsible for your own trades, so always do your own research, manage your risk, and never trade money you can't afford to lose. This content is meant to help you learn and think for yourself, not to copy or follow blindly. Let's keep it educational and intentional. Hello, and welcome back to the White Rabbit Trading Channel. Let's take a quick look at where we currently stand and how our idea is progressing. First of all, we are still waiting for the quarterly close, and from there I'm prepared for a few different scenarios. Either we see another sweep of the lows, more overall sideways movement, a breakout to the upside, or a breakdown. One of these scenarios will play out, and I would give it a maximum of one more quarter before we get a decisive move. That doesn't mean price will stay flat for the entire 3 months. As you can see in the scenarios, there will still be movements and opportunities. But what we really need to observe is whether those moves lead to a breakout or just more sideways action. Only after that will we likely see the real expansion. The reasoning behind this is quite simple. Price usually does not spend 3 to 5 quarters in the same range. At some point, a larger move will happen. We just need to identify which direction comes first. By the way, if you want to learn more about timing the market, you can join the Patreon. I've shared a new strategy there, and you also get access to monthly statistics and a trading journal. With that, you can test your own strategy and basically understand it better than 99% of people out there. That will definitely improve your trading, your execution, and your overall ability to have a clear plan and understand possible outcomes. So if you already have a strategy or you're looking for one, feel free to join and test it out. The only thing to keep in mind is that I will eventually close the group once I reach enough members. I'm sharing things that most influencers don't share, and I won't do it endlessly. Now let's switch to the charts. We are still waiting for the quarterly close, and the next chart is, of course, the data chart. Here we have our power low updated, and we also have the production cost updated. Interestingly, the production cost has gone slightly down, so that's something to keep tracking. At the same time, the power low is rising, and the other metrics are rising as well. As mentioned before, these are historical areas where I look for a bottom to form based on data, not based on the usual 70 to 80% drawdown that people expect. If these levels get broken, then I'm not sure if Bitcoin can recover quickly. It would be the first time losing these data-driven areas. It's not impossible, but it's something to keep in mind, which is why you should always risk only what you can afford to lose. For me personally, I do exactly that. The capital I'm using here is money I'm prepared to risk at these levels, and I'm entering step by step. This week, by the way, another signal flashed on the weekly, and it looks strong. This area is typically where Bitcoin has historically found a bottom or has been very close to one. Then we have another signal that also flashed, but this one is very choppy this time. I'm still observing it closely because it has already switched from pause to signal for the second time. This signal is important because it provides extra confluence for a breakout of the range. Statistically, it has around a 70% probability of not revisiting the lows, and if it does revisit them, there is about an 85% chance that price will not close below them. That makes it a very important tool for me. If this signal does not confirm properly, then it would mean the low is not fully secure or does not have that extra confluence. In that case, I would still trade the range, but probably with smaller size, and I would wait for the signal to flash again. So I'll keep you updated if anything changes, but for now, it remains a bit tricky. Anyway, this does not change our levels within the range. So now, let's take a look at the yearly price and time chart. Before that, let's take a look at what we have momentum-wise for this week. The weekly closed below 67K, but not below the previous candle's low. So for now, that gives us a slightly higher low. You can clearly see that on the line chart. Of course, this can still change, but so far the close is holding as a slightly higher low, and we'll keep tracking that week by week. Momentum-wise, it's staying relatively flat, even though price moved lower. That means the new pivot for the close is around 66.3K. Let's just call it 66K for simplicity. Now, let's quickly check the quarterly. This one doesn't look good at the moment, as it has crossed down and would need a close above 108K to flip back up. Of course, with the next candle, this number will change, but what stands out to me here is that we reached data points like production cost, while momentum is still relatively high. Usually in bear markets, we see this kind of structure forming near bottoms, and there is a slight trend visible here as well. So can price still move lower? Yes. Can it go sideways and reset momentum? Also yes. And of course, it can move higher and form something like bearish divergence. Momentum alone is never a trade signal for me, but when price action confirms a move either up or down, then it becomes real confluence. At that point, we could also see other data levels getting tapped purely from a technical perspective. As you know, everything I talk about here is something I actually use to make trading decisions, not just to throw out random scenarios every day without acting on them. So, if we see signs for price to move lower, I will update that accordingly. Now, looking at the monthly, which is closing in a few days, momentum here is clearly bearish. It would need a close above 113K to flip back up, so for now it remains down. We need to see how much lower the next value comes in. One important thing is that momentum is already near the lows. However, that doesn't mean an immediate reversal. It can stay there for some time and has its own deviations. That's exactly why I keep additional data points on the chart that are rising. We already hit the first one, and as it stands now, we still have a signal suggesting that this range has a higher probability of moving upward. If that signal disappears, then we have to be open to lower levels purely from a technical standpoint. Now moving down to the lower timeframes. The 5-day momentum remains up as long as Bitcoin closes above 66K, very similar to the weekly. The 3-day is currently in decision mode and would need a close above 71.5K. So for now, it's not very useful, and we'll revisit it later. The daily momentum is fully reset at the lows, but still remains bearish as long as Bitcoin does not close above 69K today. I'm watching this closely because it will become useful later, especially for identifying a daily cycle low setup. The 12-hour momentum has freshly crossed up and remains bullish as long as it closes above 65.7K. The 6-hour timeframe is also freshly bullish and holds as long as it stays above 65.7K. Now the 4-hour timeframe is where things get a bit tricky. If price does not make a new high, we could see a bearish divergence forming. But it's important to understand that if higher timeframes remain bullish, the 4-hour can stay elevated for quite some time. So for me, it's not very useful right now, maybe later. The same applies to the 1-hour time frame. It's at extremes, but if price is ranging, those levels can reset very quickly, so it's not very actionable at the moment. Well, in one way it is useful. It clearly tells me this is not a local scalp or long area for me. I just keep my trades, because people often start chasing missed trades here. For me, this was simply a small take profit area, nothing more. So that's the momentum overview. Higher timeframes like the monthly remain bearish, while the weekly is still holding. Best case for now is continued ranging. The lower timeframes, especially the daily, need to flip bullish. If that happens and we see a clean impulsive move up, that would confirm direction, and I would most likely aim for higher levels. If that fails, then we stay in the range until new signals appear. And with that, let's move on to our range. First, let's look at the yearly Fibonacci time and price chart. We've been talking about this specific time window, where I combine the yearly Fibonacci time with the daily cycle time window. In this window, I want to see price reaching a key level, and that's exactly what we got. Price moved down into a support level right within that time window, and so far we're seeing a nice reaction. As long as this area holds, I can't look for lower prices. Wicks below are allowed, that's completely normal. But if price starts to close below this level and then treats it as resistance, then lower levels become possible. For now, though, it's clearly acting as support. So the next logical target is the next higher level. It's always about moving from level to level, and the best setups happen when price aligns with time, when both price and time hit key zones together. Now, from a directional perspective, bears would want to see a breakdown during this time window, while bulls want to see continuation to the upside. In my case, I follow the statistics. As long as the signal remains intact, I go with it. That means, for now, the higher probability still points toward a move higher. However, I'm still keeping a small short runner open just in case, because this situation is a tricky one. It's tricky because of multiple factors: the signal behavior, the timing alignment, and also the fact that the usual 80% drawdown scenario would imply lower prices. At the same time, we've already hit important levels, so overall, this bottom formation is not straightforward. And honestly, I think that's actually another argument for a bottom forming in this range. A deeper move lower would almost be too obvious. A lot of people are expecting lower prices, and if everything lines up perfectly with all signals flashing at once, giving everyone a clean entry, that's usually not how the market behaves. If I'm being honest, I'm a bit more pessimistic in that sense. Markets often don't give the easy trade. Personally, I would welcome lower prices, 50K, 47K, or even lower, but that would actually be an easier trade compared to what we have right now. Right now, we're in a zone where people are still undecided. That makes a range breakout to the upside the harder trade, because many would be sidelined and then forced to buy higher. Of course, I can be wrong on that idea, but that's my current perspective based on how things stand. All right, now let's move on to the next chart, our range. Here we track these levels, mainly the range low, the mid, and the high. And inside this range, we already had a lot of trades. The next area to watch was the mid-range, especially with the confluence we had there. Fibonacci levels, volume area, mid-range, and on the yearly fib time, it was also an important level. So we had several levels coming together in one area. The plan was simple. First, watch this area for the first trade, and then see how price progresses from there. We had different levels in the range, but going step by step means I also take the trades step by step. And so far, we've seen a nice reaction from this area. If that area fails, then I would look for the next trade at the next confluence area, and so on. Trying to catch the bigger move right away is, in my opinion, the harder trade right now, as I mentioned before. And a lot of people would stay sidelined, especially those who are now calling for lower prices. The range break is something I would like to see within this time window, whether it happens to the upside or the downside. But I want to see that move happen in this specific time window, because if that fails, then we could see a much longer range developing, which could last at least another month, maybe even longer. That's why, for me, this is the key time window for a move. Here you can also see a trend line, and that one is now important for the daily cycle low. That means, for confirmation, we would like to see a break above this trend line, ideally after price hits support. That has now happened with the mid-range. So if price breaks up from here, and then the daily momentum, which I showed before, also crosses up, then that could be the move that leads to the next higher prices. And if that fails, then as I said, we are probably looking at a longer range. Personally, I would actually welcome a bigger range, because this range, just like other ranges, gives us nice opportunities to trade inside it, if you have the patience to wait and the discipline to execute your plan. And that plan should ideally be back-tested, so you know what to expect, how likely it is to lose, and what the outcomes can look like. If you have that, then you already outperform the other 99% of people who panic when price drops into support areas. And if you want to see a good example of how a strategy can look and how it can be tested, you can check that here in this video on Patreon. Okay, so what's next? Well, next we have a local SR level here that price needs to reclaim for more upside to happen. That also means it's currently a rejection level. For me, I'm still just holding the short from the range high, and I'm happy to keep holding it for lower prices if needed. But if this level gets reclaimed, then the next area is once again the range high. That would clearly favor the bullish side, and I think in that case, price can revisit the short entry back into the structure steps on the left side. And from there, we either get another rejection or a break. But I would definitely look to take some profits on the long there. For now, I'm also waiting for the new monthly open so we can place the new monthly stats on the chart. These lower levels are not from the table, so a rejection from here needs to be watched closely. If price range is here like we drew in the last video, then that's completely fine. But if it starts moving below this area, then I would aim for the next lower level, step by step. So the plan stays the same. Look for entries. Take profit at resistance. If price reclaims the level, let it run, and if it fails, then look for the next level. That's the same plan we've had now for weeks, or even longer. And with that, let's switch to the local levels. Here we now had a few limit orders filled. The first one was on Friday on the first touch. After that, we got a bounce, and I took a small TP there. Then price dropped again, and that's where my second limit for the swing, like I updated before, got filled. With that, my average entry moved lower. Before, I had an entry at 65.7K, and the second one was filled at 65K with an SFP. So my average entry is now around 65,252. The invalidation is below the SR level as planned. I would allow some SFP below it, but I would not like to see these levels fully lost. If that happens, then it simply opens the door to the next lower levels. Of course, it's in my interest to protect the trade, but at the same time, I'm focusing on catching a bigger move. That means my TP1 is not very aggressive, and the trade is not fully safe after TP1. That's the trade-off when aiming for a larger move. However, taking partial profits still helps to reduce the overall risk if price moves against me. The reward, on the other hand, is much higher. My next TP areas would be above the range high. I'm also thinking about whether I would take a TP on a local rejection here. It's not my preferred option, but we'll see how price behaves. If I take action, I'll update it in Telegram. Another way to manage the trade is to move the invalidation higher, which I will most likely do. That way, even if the trade goes against me, it would either end in break even or a small win. It really depends on the situation and what kind of move we get when price retests this area. But the plan is clear. I want to catch a move toward the higher timeframe levels, basically a breakout of this range. I would catch that move either way, since I also have a short from higher levels and longs from lower levels. But I also want to catch that final move before the breakout. If this was already the high and price just moves lower from here, then so be it. The short from the top already caught that move. Now I'm trying to do the same on the long side. I still have my older trades open as well. Anyway, that's the plan for now. Simple and structured. I've already taken some partial profits and will look to take more around the range high. The invalidation can now be managed more locally around this low, but I would still allow for an SFP. Overall, I will update if anything changes, because the plan can always adapt with new information. So for today, this is the local resistance area. If price reclaims it, I think we move toward the range high. If we get rejected here, we could see more ranging, which is completely fine. But if price moves below this area, I would cut the trade and look for the next lower levels. Until then, happy days if you followed along. Make sure to check out the Patreon. Do yourself a favor, especially if you're in the learning process. Hope that was helpful. I wish you a great day, and I'll see you in the next one.